International investors are seeking to sell their China properties at sharp losses after having poured billions of dollars into the real estate market. However, many foreign investors are stuck with real estate assets that are increasingly difficult to sell. Since late last year, firms like BlackRock and Carlyle Group have been selling commercial properties around China for far less than their initial investment, and this has resulted in losses for the banks who provided financing for these properties. Dealmakers and bankers say that more international institutions are planning to sell their Chinese assets. Lenders such as Standard Chartered, HSBC and other banks have warned of increasing defaults on real estate loans in China. Over the last 15 years, foreign investors have poured almost $140 billion into China's commercial real estate market. According to MSCI Real Capital Analytics, they brought office towers, warehouses, retail complexes, and data center investors were mistaken in thinking that there would be sustained demand for companies seeking office space. However, rents are falling and property values are crashing due to an extraordinary supply cut. Some property prices have now fallen to levels seen a decade ago. Meanwhile, distressed calls of China commercial real estate assets total 114 billion yuan or $16 billion over 2023 and 2024. Now, according to a report by Bloomberg Intelligence, that made up a record 22% of total transactions last year. A distressed sale happens when there is a loan default or when a seller loses control of an asset. And as a result, banks warn of more pain ahead. The worry and the problem now is that the longer property owners wait to sell, the bigger their losses are likely to become. Prices of Beijing and Shanghai offices have plunged at least 40% from 2019. A majority of foreigners' real estate purchases were centered in those cities. That is threatening more pain for a sector that has weighed heavily on Asia's largest economy.